Hey traders, this is Gary McLaughlin, and what happened on Wall Street today can be summed up in one word: up. The market just went straight up. I suppose traders like the ideas or like the idea of the government bailing out the banks. Why not? Okay, quick review of how I traded today. First of all, the market traded up here, straight into the bands. Not surprisingly, I'll show you in a minute. I triggered short up here. And then shortly after this trade, I quickly realized that this was going to be a relentless buying day. And I switched gears from fading the market to following the market. And I'll show you the big difference between how those strategies work. So this is how I traded today. Market flew up after the housing number, short 88.75. Nice penetration into the bands there. That was a great entry. Over here on this candle here, as you can see, had it continued up without switching to the next candle, I would have triggered again short right on the bands there. So that would have been a terrific entry there. The market, when it went to this candle, expands the bands here. So I canceled this order and backed it off and added it to what I would have had here. Obviously, this trade did not show me much of a profit. This was an exit at plus one tick there. So at that point, I'm not going to be arguing with the market. If the market wants to skyrocket up, I'm not going to start selling it. So over here is probably one of the biggest trading trips I could ever give you. On a trend day, what you get are small body candles, just like this. They're typically even smaller than what the body of this candle is. They're typically in a star, which I think they're called doji candles, where the open and the close is the same, and you'll get a consecutive number of those. When you see that, what you want to do is find some sort of resistance on the tops of these candles and just do something like this. Let me get rid of these orders. Just do something like that where you're going to place your order right on that line and you're going to buy up into that move. And it didn't look quite that way today, but it was close enough. And what I did here was I went long at 94.75 and then exited at 75.75 and 99 even. A quick topic about how I use a stop on a follow or trend following day like this. I don't put a really tight stop in. I put about a 5-point stop in was what this was, and I had a 5-point target. Now risk reward, they're exactly the same, but I'm not going to let the market come down here and touch the stop before I get out. So on a risk reward basis, this is my worst case scenario, but it's unlikely I'm going to let the market move against me like that before I get out. What I'm probably going to do is kind of eyeball where the market's at. Should the market come down here, when it goes below this load, I'm more interested in how the market behaves at this point. If it just ticks below there by a tick or two, I'm not going to bail on something like that. I don't want to get tagged only to watch the market go higher on what would have been a profitable trade. So if the market slices through this bottom with a lot of momentum, then I'm going to trade out. And I'm probably going to look to buy down here. So even though I got a 5-point stop in there with a 5-point target, I'm not going to risk 5 points for 5 points. I want better risk reward than that, but I'm not going to have a tight stop here where I'm just going to get tagged to watch the market go up. So I took a partial on this, and as soon as I take a partial on this, I move this stop up to break even at 94.75. And even though I'm not fading the market today on such a strong day on these band triggers, I am taking the profits on those triggers. So you can see my last exit there was 99.00. Now over here, you can see that I'm just on those doji candles, I'm just buying right above those high. The same thing happened here. Why did I not trigger like right about there on that high when it just went above that high by a tick? This was just a complete gut call. I just didn't think that the market had enough momentum to continue on up. And even if it did, the profit potential in theory was limited to this resistance line. So I was only looking at about, I don't know, let's call it about 800, maybe up to 804, or 802. So I'm looking at 2 points to risk, I don't know, maybe another 2 points. I just didn't like the risk reward, so I left it alone. Long story short, the market came down, probably took out a few stops, trailing stops down there. Once it did that, it firmed up, and then I triggered at 97.25 there. This was one of the most frustrating things you can have happen to you. I had my order parked up here at, I think it was 802, or 800, no, 802.25 was where I had it parked. I took a partial here at 99.5, moved my stop up to break even just like I did over here, and then I had my last exit parked at 800.25. Look what happened to me. The market came right up, touched my order, and get rid of these lines so you can see it more clearly. Touched my order, did not trigger. After that happened, the market started selling off fast, so I just hit the trade out button, took it at 99.5. So I left a little on the table, but things like that are going to happen. Had I left a stop in there, it would have triggered my stop, so at least I saved a little bit on that trade. This trade down here, now this is a trade that goes into the band, so this is not a trend following trade. This is a fade trade. So this is an entirely different trade as far as risk management goes. As you can see, I don't have a stop parked down here. I do have one parked down here off the screen, so I can pull it up at a later time should I need to. But on this trade, I'm not using a tight stop at all, or even something like a 5-point stop. I'm scaling into this, so trigger there at 94.75, just below the band. That was 2 ticks from the low of that candle, which is exactly what I want. Again, 92.75, 1 tick from the low of that candle. So these entries are just about perfect. Now, why I exited here at 94.5 would take me a long time to explain. I'm watching closely what's happening on the ones, and the more time that goes by, the greater the probability is, or the potential is, for the market to come down somewhere down here. So had that happened, I don't want to have to fight that with a full load. So I took this off, I think it was plus 3 ticks. And then the more the market went sideways, the more a bearish scenario started setting up. So we're looking at a potential bear flag or something to that effect there. So I got out of this trade at 95.25, and obviously my suspicions were somewhat correct because the market did come down. And I never did get a clean look to jump on this train again, so I just let it go. You know, am I disappointed that I missed the majority of this move? Yes. I followed my plan, and that's the only thing that matters. That's my trading plan says if it goes sideways for a long period of time, you have to get out of the trade rather than risk having to fight it down here. So I did get out of it. Yes, I'm disappointed I didn't get more on this trade, but I followed my rules, and that's all what trading is about. When we get up to this point, into the bands again, I triggered short 805.00, recognizing the strength of the market. I am not going to overstay this trade. I scalped a point off of that. Quickly, the market firmed up and started turning up again, long at 805. I can't really see what that number was. I think it was 805.7 or 805.5, I believe. And I got out at 87 or 807.75. So a scalper long there. We started running out of momentum at this point, and I didn't want to be stuck at the high of the market should a correction come in. I don't typically trade the last half hour of the day for no other reason than I've just found that I don't have much of an edge in the last half hour, so I just let the market do what it's going to do. So I'm done for the day. So I had a really, really nice day today. Decent profits on the day. I quickly shifted gears from being short a massive bull market today to buying the bull market. I'm not going to argue with the market if it just wants to go straight up, especially considering the news that we had today. So that's pretty much it for today. The lesson for the day, if the market is going to roar like it is, don't be afraid to switch gears. And that's pretty much what happened on Wall Street today. Straight up. I think we're going to go straight up into the close. Hope it helps. Until next time.